It's January 4th. I'm an associated member of T3 Trading Group, registered broker-dealer, and member of all of my trades are placed in T3 Trading Group, and you should carefully consider whether trading is suitable for you in light of your own financial condition. There's the position disclosure. It's unchanged. You did an inside day today. Is it looking blurry for you guys again? I remember someone said yesterday it looks blurry. On the VTF, it looks blurry to me. I wonder if it looks blurry in the YouTube. I think I had this problem one time last year. I'm not really sure what that's about. I'm curious if it's blurry in the YouTube. Let me see. YouTube looks clear. Wonder why that is. Getting echo? Oh, sorry. Thanks. When I have headphones plugged into the computer, it creates an echo on the YouTube, which is really weird. But yeah, it looks like it's the picture quality is clear on the YouTube, and for some reason the quality cleared up a little bit on the VTF. Maybe just some time to catch up. Okay. Let's jump in. Another wild one. Yeah, as much as it seems like a wild day, it's actually an inside day. So that's pretty crazy. We did finish positive today. The S&P is up 3.75%. Qs are up 0.5%. Definitely relative inside of the NASDAQ, especially mega cap tech. You fix that by turning off your computer mic, headphone mic, and get the settings. Thank you, Zach. We'll look at that a little bit later. IWM is up 1.3% today. So the Russell leadership, we love to see it. Again, intraday price action today was really whippy and wild, yet it's an inside day. We had a gap up this morning. The gap got digested really well here over the first half hour. Just as the ADMA was catching up, which is usually when you'd be looking for technical continuation to the upside, digest the gap for 15 to 30 minutes. The ADMA 5-minute catch up is usually when you're looking for continuation. Just as the technicals here are looking right for continuation, we got our 10 a.m. economic numbers. ISM manufacturing PMI, and the JOLTS number. Still? It's still echoing? It's so weird. Fixed now. Mute PC audio. Did that fix it? Someone let me know on YouTube if that fixed it. Sorry about the issues. There we go. Okay. Sorry about the issues, but once I learn this, then I know what to do. I'm not a computer guru. There's always a little bit of a delay on the YouTube for whatever reason. So you guys in the VTF get the information a few seconds early. Cool. Thanks, everybody. So what was I talking about? So the market was looking good here coming into 10 a.m. And and just as things are looking really good, we got our ISM manufacturing PMI number, which I struggle to interpret that number, slowing down good because it brings down inflation. Is it bad because of the recession? Is good news? Is bad news? We chatted about that a little bit today in the VTF, and Penny was asking about it. And the JOLTS number. The JOLTS number is a little bit more obvious to me. One of the bigger concerns that the Fed still has that's going to enable them to continue to tighten things up is the labor market. It's like the spread between job openings and job seekers. They really want that to come down. As that comes down, then the employees that are out there, the workers that are out there, they've got less kind of power, which can bring down wage increases and wage inflation. So that number came in higher than expectations. The job openings. So for me, that one's still very clear cut. that number coming in high is actually bad for the market. Regardless of how I attempt to interpret it, the market interpreted the numbers not well. So we traded down here for a solid 12 minutes or so. We retested this important 380. This 380, you know, it's getting sloppy because we've gone back and forth through it so many times, but it's still an important inflection level. You can just see here, even as I scrolled back, like yesterday it was support, then it was resistance, then it was support. Today it was support. It's pretty much the low of the day. So we got a little bit of a hammer candlestick with a little bit of extension right off that SPY 380. Worked our way up a little bit, had this consolidation kind of come in. I remember saying that we need to kind of clear this consolidation to the upside, and that could wake the market up. And once that happened, and we, at that time, again, we're specifically looking at relatively strong stocks for longs. Like, once again, a Shopify has kind of continued to be on my list. Stock stayed nice and green here. Looking at Shopify through like this 36 quarter. But I remember watching the 1035 5-minute candle form. We tried to break through these previous highs and came back down. It didn't look great. What I said was we need to break the 1035 high here for this market to start to look a little bit better. And we did it. And we did it in a pretty good way here with a positive Maribozu. And I remember as this candle came out, telling everybody while it was still open that you can look to be long versus the low of this candle. Not an A-plus trade by any means. You know, it's 10:40 in the morning on a Fed minutes day. So there was a real chance that we could just be chopping out. But if you're looking for some trades, broadly being long relatively strong names or the market versus this low, I felt was a good trade. And it was. It worked out pretty well. Market grinded up. We eventually even broke the 10 a.m. high. That's obviously really important whenever a news event comes out, and we'll talk about this again at 2 o'clock. Whenever a news event comes out, you want to pay attention to where the market started and kind of that initial high or initial low. So, you know, at 10 a.m., the market's trading at around, you know, 383, but you get this initial uptick, basically the highs at 384.20. If we can clear that, the market's really giving us an all clear sign. And that's exactly what happened. This market just kind of gave us continuation. At that point, though, it's midday, Fed minutes coming out. This is exactly when you don't want to do too much. Action's a little bit sloppy, roll down, bounce back, blah, blah, blah. 2 o'clock, Fed minutes come out. Pretty sloppy candle. You know, a lot of the times, and this is what I said earlier today too, when the minutes come out and when the minutes come out and they don't really say anything that's new or that surprises the market, a lot of times you end up with a ton of volatility, and then you end up almost exactly where you started. And it's kind of what happened today. I mean, we started at around, you know, 384 and change. Number came out, we had a very quick uptick, and then we sold off. Same thing applies as what I was just saying with the 10 a.m. number. You know, while you're below the starting point and while you're below the opening high, you are generally going to be a little bit better off being, you know, short than long. And at one point, we got a little bit of a lower high and a lower low, and that was kind of scary. Another lower high. I think, was this a lower low too by a couple of pennies? It's that 22 cents. It's this low. It was not. It was like an equal low or a slightly higher low. So we weren't looking great here, but I didn't have the conviction to press the short button or to do anything too aggressive within this price action, because what the Fed minutes said definitely did not sound good. But the question is not whether or not it sounds good or it doesn't sound good, is what are the expectations, and is anything new being said? And it was pretty much a repeat of, you know, what we already know. The hawkish language from the Fed about how they're concerned that the financial markets might, you know, get ahead of the Fed and begin to loosen conditions on their own, which could you know, exacerbate inflation or keep it going for a longer period of time. And none of that was actually new, though. None of that was surprising. It sounded pretty bearish. It sounded kind of scary, but it's the same exact information that we got on the Fed day in December when they last increased interest rates by 50 basis points. So I didn't really have the conviction to do a whole ton in here. I managed my positions a little bit, traded a few things a little bit back and forth that I was in, kind of just for cash flow. But I really didn't do anything new. And then we had this really strong rally in the last 15 minutes of the day. to just about close where we started. Just about. So we'll see. That's an analysis of the intraday price action today, which, again, was pretty wild, especially considering that it was just an inside day. Another inside day within a consolidation. And like I always say with these inside days, when it's within a consolidation, you don't want to overread the inside day, you know, high or low, because it's a little bit random at a certain point. What's more important with this consolidation is the support and resistance of it. When and how will that support break down or that resistance break out? That's really the big question at this point. We've been stuck in this consolidation for 4, 5, 6, 7, 8, 9, 10, 11, 12, like 11 or 12 days basically at this point. So, you know, over a couple of weeks of just back and forth chop. The market's more or less continued to hold up with some further deterioration in some of those FANG names. And again, the FANG names were super relatively weak today. And we have an inside day. So this inside day can give us some clarity. If we can break above the high of the inside day tomorrow, we're basically also breaking resistance. So that would put this market a little bit more firmly into the bullish camp. And then know your downside levels as well. You know, if we start breaking below this like 378 and then 375 is the bigger spot, I mean, Pat's been saying that should just be like a trigger short entry. And he's probably right. Because then you're breaking lower. But for the moment, there is still the potential of the bull scenario, which I do think is a slightly lower probability scenario just based on the technicals, of this being a higher low and building out a bit of a wedge here. That's what bulls want. Bulls need this to be a higher low versus the lows of 2022, work its way back up, maybe create some sort of wedge, and then have the wedge actually break to the upside, leading to the market getting above the 200-day and a break of the big picture downtrend line that we've been in for the year. So that is our SPYs. Loving the relative strength from the IWM today. I don't know why my chart's not giving me a daily candle. There it is. Loving the relative strength from the IWM today, but it's also just an inside day. So we need this IWM to really break above this like 177 area. Really, and then really 178 is an area that it broke down from. So 177 to 178 for the IWM is really important. And then your Qs. Qs here are technically also an inside day, extremely relatively weak. Started with Microsoft. So Microsoft got the downgrade on the cloud information. Did I just lose my internet? Can you guys hear me? Yes, you can hear me? Okay, looks like things on my end cut out for like a moment, but came right back. I hope the YouTube didn't break. Okay, cool. Yeah, Microsoft. Yeah, my internet's doing something weird right now. I've been in a storm here for days. It's kind of crazy. Well, not for days. I just got here the day before yesterday, but it's been storming here for days. Microsoft got the downgrade this morning. The downgrade was specifically on cloud worries, and they really hit Microsoft hard on it. It was very relatively weak, and it seemed like it negatively impacted the other major tech companies as well. Amazon was also, you know, very relatively weak today. Google was even weaker. So you got Microsoft down 4.5%. You got Google down a little bit over a percentage point. So yeah, these things were really, really weak today. Meta, am I going to say it? I'm going to say it. Meta was a little bit better. You know, held in well after kind of breaking up, and that's been a pretty good swing trade for us. Apple's an inside day, but this chart's very broken. There's nothing to talk about with it. If anything, this is a potential short setup on an inside and down. And Tesla was okay, gave a little bit of a bounce back, but is also an inside day, so we can pay attention to that for clarity. So mega cap was like the weakest stuff that was out there and really held the Qs down to a degree. But growth was actually pretty good. And we had a lot of stuff that was on our radar from this morning that was really good. We were looking at gold miners, we were looking at you know, some of these growth names, Snap long versus 875. Didn't give dramatic follow through, but that trade was kind of okay. You know, Shopify is one that I've continued to watch. This gave fantastic follow through. That's what we were looking for from that today. We discussed MLCO with some of the option flow and relative strength for a breakout of this bull flag. That one was really solid. We discussed the gold miners. Gold miners were great here with continuation above 30. That's kind of a breakaway gap. Specifically, this GOLD is one that we were looking at. This was actually one of Pat's ideas, long above 18. This was basically a really nice breakaway gap. I think Tom brought up that. How did that STLD close? Yeah, I think Tom brought up this. I think it was Tom in the morning meeting. Brought up STLD, which was, you know, day 5 to the downside, but overall has been a really strong stock. So this was like an RDR situation back to the previous day's low. So that was also solid. So yeah, a lot of really good trades out there today that worked out. We were really focused on the right stuff. You know, we were not focused on the mega cap stuff today, and that ended up being super weak. We were, and if anything, we actually talked about a Microsoft short off the open, but the Microsoft short I think was difficult from an execution perspective. And the stuff that we were looking at, you know, the growth stuff, the miners, all worked out really well. So definitely a good day today, I think. Just even though it was an inside day, it was a really good day for the team. And I just realized I never turned on my face. But that's all I got. So I'm happy to answer any questions that you guys might have. What do you guys got for me? Nothing? Nobody? Did my internet die on me again? No, looks like it works. I don't think I've ever had an afternoon meeting without any questions. Netflix was super strong. Can you continue? Yeah, oh, this was also one we actually did discuss. Netflix through 300. I think that the execution on that, if I remember it correctly, I didn't trade it on the small time frame, was tricky here early. Yeah, it was. Because it was breaking above that 300, and then the numbers came out at 10 that whacked this thing down in such a way that it might have been hard to hold through this pullback, depending on the stop loss that you were using. And then the re-entry was probably difficult as well. But Netflix, Meta, probably the best FANG names right now. I had Microsoft in that list, but Microsoft actually had a breakaway gap to the downside. Can Netflix continue? There's no reason to think that it can't, especially if you can get a little bit of market help. You know, this is really what I'm trying to focus on right now, is some of these relatively strong stocks. You know, Netflix is able to act this well today, and that's without the market doing anything, right? That's with the market having an inside day. So if this market can actually go and give some continuation, then Netflix should be able to go as well. With that said, you know, you need to be in it from today, and I do think that the execution on it today was tricky if you're trying to buy it through the $300 spot that we talked about. Zachary saying I used first 5-minute bar as low. Looks like I should have used yesterday's close minus a few cents. Is that typically where my stop at the open should be? Oh, you're talking about Shopify. Oh, okay, gotcha. Yeah, so that's Netflix. On Shopify, so Shopify, even though I was looking for this for continuation, I actually like the trade better for yesterday because you got the inside and up. It's a little bit more of an actual daily setup. Today, maybe there's a little bit of a level like 37.25 for some sort of continuation. So I think that the new long entry execution for Shop is actually a bit tricky today. I don't necessarily think that you just buy a stock and give to an opening low. That's not really a trade for me. There needs to be more of an actual setup. A trade that I would have liked would be to go long off the second bar of the day. And you would have, maybe you get your risk covered depending on your entry execution, but you would have gotten stopped out of that. Again, when the 10 a.m. number came out, it would have pushed you out. But I like this long off the second bar. I don't really see a reason to buy within the first 5-minute bar unless you're just hoping it's going to be strong, but hope is not a trade. You know you have the gap up. What did we want to see this morning from the market? What has happened consistently with market gap ups? They've been sold. Market gap ups have consistently been sold. So we didn't want to just rush into long positions, even though I was feeling optimistic in the morning meeting today because the dollar was down, interest rates were down, oil was down, gas was down, the market was gapping up. I thought that there was a lot of layers of probability on our side for longs that maybe could help this market hold the gap for once. but we still wanted to be patient. It's technically a common gap within a range. Those tend to get filled. That's been especially so over the course of the last month. They've just been wrecking gap ups. So I really don't like the idea of just, you know, buying shop off the open versus like the opening low, to be totally honest with you. The second candle here, when it closes, I like that. Now you've had more time to digest the gap. This is technically what I call a continuation hammer. Closing green with a tail here that's making up more than half the candle. That tail is into the ADMA, so you no longer have any extension here. When this candle closes or when it's about to close, I think you can go long with a stop loss at this low. And again, what is the trade? A trade is something with a technical reason and a technical out, right? So the trade here is what I would call a continuation hammer trade. It's based off of the candlestick analysis, right? So continuation hammer, that's this type of candle. What does it mean? Sellers drove this thing down to equilibrium. It's usually where, if it's a strong stock, it's going to pivot. That's why it's a continuation hammer. It's continuing an ongoing trend, and this thing has been kind of trending higher here over the course of the last several days. So you are continuing an ongoing trend. You are buying the stock versus the low as the ADMA is caught up to that price, so it's not even a momentum trade. And you're looking for trend continuation, basically. So that's the technical reason. And again, the technical out is going to be this low. Why? This is the spot where sellers were briefly in control, brought it down to that low. Buyers take control in the equilibrium area at the pivot low. A pivot is a spot where buyers take control from sellers. So that 3603, I always go a penny below, so 3602 becomes your stop loss off that pivot of the continuation hammer. And then, you know, it tries to go, it's a little bit sloppy. Hopefully this tail is big enough where you get your risk covered if you're taking that trade. And then unfortunately, you know, right as the thing is starting to try and the market's starting to try, the numbers come out and the trade just fails and you get stopped out. That, I think, is the better trade. Not buying off the open versus the opening low, not necessarily buying off the open versus like a gap fill either. I don't think, I've never felt that gap fills are appropriate stop losses. Is an appropriate out. Again, what is a trade? A trade is something with a technical reason and technical out. We do see gap fills oftentimes act as general support or resistance, but I don't think it's specific enough that you can be using that as a stop loss. It's the gap fill support or gap fill resistance is usually sloppy. They don't quite get to it, or they overshoot it by a little bit, or whatever. It's not really as clean as that. The only thing that I would kind of be okay with is if you just bought like a feeler off the open because you wanted to watch it, and you're giving your feeler all the way to the gap fill. And then you're waiting for the actual trade setup, again like the continuation hammer, to come in to be able to get more size. So, hope that helps, Zachary. From Eddie on CRM, yeah, this one failed. I tried CRM on the open versus 140 and I got killed. I hope he didn't get killed. Also made a mistake on my level 2 entry, so definitely my fault. But I learned it was like the fangs you talked about being hard to trade. You read today, but you learned. Okay, well that's certainly part of it. You know, there's nothing wrong with having down days or down trades. I want to say that as long as you did the right things. And even if you didn't do the right things, that happens to all of us sometimes, it's still going to be okay, provided that you take the time to really learn from any mistakes that you made so that you don't repeat them and you can make the appropriate adjustments for success. CRM can be a little bit tricky to trade. It's $141 stock. I know off the open this thing can be a little bit thin, can be a little bit spready, so you do want to make sure that the spread is appropriate. I liked CRM today long versus that 140 area, which was a previous level, because there was news that the company was restructuring, and that is going to tend to be bullish. It lays people off. They're getting rid of some office space. They're going to incur some expenses by doing that over the course of the next year or so. But generally, that restructuring is viewed, what we have seen, that restructuring has been viewed as a positive thing for tech stocks that are in bear markets, that they're getting rid of the excess and they can start to potentially work their way back up. I remember when Snapchat, they were kind of one of the first to announce those bigger layoffs, and the stock ripped higher on it. So same thought process here was maybe we could get some momentum in CRM above 140, which is this previous pivot, but you do need it to clear this Maribozu high. And the trade just failed. So I have no problem with buying stock in CRM off the open versus 140 as a trade. A couple things I would say about it. One is that you have to recognize what type of trade that you're involved in. If you're buying CRM off the open versus 140, and again, I like it as a trade, but it's a momentum trade. It's a pure momentum trade, meaning you could have the stock go below 140, stop you out, and the trade itself could still work. Why does that tend to happen? Because the ADMA has not caught up, because the gap has been so big, because of the news that kind of came out. The next thing that you just need to make sure that you're paying attention to, and maybe this is more of where your kind of mistake came in, is your sizing versus your price, so that the dollar risk that you're putting on the trade is appropriate. For me, a pure momentum trade like this, where I'm buying with a stop loss that the ADMA hasn't caught up to, is really never going to be like an A+ trade for me. As a matter of fact, I actually struggle with those pure momentum trades a bit, just because, again, I tend to fight stock if I get pushed out of a position and I don't know that my idea was wrong. And if the stock's trading below 140 here, I'm not going to know that the idea itself is wrong. So, you want to make sure that, again, that the sizing that you take versus the space risk, in other words, the dollar risk that you're putting on the trade, is appropriate for the trade that you're putting on. Is it an A+ trade? I don't think so. There are some good things about it. It's got news. It's gapping up above a level. The market is potentially on the side of it. You would expect maybe to have some elevated volume in it. But, again, the trade just failed, and that's what happens. As long as you are comfortable with the risk that you put on, there's no problem. If you put on way too much size, you got a bad price, you ended up losing more than you should have, or your stop wasn't in the right spot, wasn't at that, 140 or 139.99, those are where the potential mistakes are in it. So hope that helps, Eddie, and I appreciate you bringing up a trade that you were not successful in, because we can learn from those as good, if not better, than the trades that actually work out for us. So, appreciate it. Next year from John Mark. You went after Snow short through 135. Okay. Yeah, a lot of these types of stocks, so first of all, 135 is a support level, and a lot of these names were very relatively weak today. A lot of these kind of software type companies, like Snow was very weak today. This Sumo that I'm in was very relatively weak, and I'm annoyed that it's back below $8. I really don't think it belongs here. I remember seeing like PanW was really weak today. CrowdStrike was weak at certain points, definitely weaker than the market. The Sentinel actually ended up closing well, but was weak at certain points. So you had relative weakness, and you got a major support level that's there, and you shorted it through support. I love it. So short through 135. Might target this name again tomorrow if 130 fails. Any thoughts on this potential setup given the cloud sector weakness? The biggest thought that I have is that you should still be in it. Maybe not. This actually looks like it was impossible to trail. I would like you to still be in it in theory. In practice, I see that is a very difficult hold, right? So you shorten through 135. I love the execution. The stop loss, just so you know, though, is pretty wide. You really, to trade this properly, need to give it up to 137.60. So you are taking on $2.60 worth of risk. So you do need to make sure that the risk is appropriate for the trade. I think that's the proper stop loss if you are taking this. This is a breakdown. So this is not, it's the first candle of the day, fine. But this candle, we give a special name. We call this an ignition candlestick. An ignition bar is the candle in which a breakout or a breakdown occurs. In this case, obviously, a breakdown. So the breakdown level, the daily support level is 135. You short through 135. The problem with this trade is that the stop loss has to be the high of the ignition bar. So you're taking on $2.60 worth of risk. Was that worth it for you here? Maybe. I probably wouldn't have taken it for that much risk. It obviously worked, but just because it worked, it doesn't always necessarily mean it's a good risk reward. But I really like the idea. I really like the recognition of the sector weakness, recognition of the level, shorting the appropriate execution price. I really like the idea. I like the layers of probability, but we also have to pay attention to risk reward, and the risk reward I would say is kind of iffy here. Having to risk $2.60 is a lot. Regardless, trade works for $6 within 15 minutes. Trade works for $6. So really nice. It gets a little bit extended here. You have a little bit of a first of all, you have a little bit of a pivot high on this candle at 9:40 at 132.50. EMA eventually catches up to it like 5 or 10 minutes later. Then you get a new low. So you could have lowered your stop based on my trailing rules then to the high of the third bar here, the high of the 9:40 candle, which is 132.50. And then you would have eventually gotten shaken out of it. It makes a new low. It doesn't quite break that high. Can't make a new low. The market's now improving, so the market's not helping you out. Still didn't break that high. And then eventually, here at 11:45 or so, your trailing stop probably triggers and you get stopped out. The only way that you could hold this, I think, throughout the entire day is if you love this thing short so much that you were willing to give at least some of it back to opening highs. In which case, then you want to keep it for tomorrow. If you couldn't hold it throughout the entire day because you trailed it properly, that makes sense to me, and I'm fine with it. In regards to looking to short it again tomorrow, potentially through 130, that's going to be a much more difficult trade than this trade was, because by tomorrow you're looking at day 3. I don't think 130 is as important of a level as 135 was, and you're shorting at day 3. That's going to be significantly more difficult. You're going to be shorting the stock through 130 when the EMA is at like 138. So you're shorting extension. It's a very different trade at that point, and I don't like it as much. So I don't necessarily know that I would go after it again tomorrow. The ideal situation, and I know you might not have it because they made it hard to hold, but I just want to emphasize why the ideal situation is the ideal situation, is that you're still short and you're swinging it, and you're in a win-win situation. And you just, what can this thing do to continue to pay me? That's what you want to see. So yeah, nice execution on Snow. From TJ on Zoom. Zoom had great bull flow today. I did see some bull flow in it. Worth a shot entering early or waiting to break 69.33 from yesterday's high. So the first thing I would say is that bull flow is a layer of probability. It is not the end-all be-all. And we do want to see usually consistent flow in it. And maybe there was consistent flow in Zoom. I wasn't paying close enough attention. I did see some flow in it. But like an example of one that we saw really consistent flow, IQ on the 29th, Thursday last week. I remember all day, IQ, super, super consistent. Not surprised at all to see this IQ has worked its way up to $6.40. It's still a layer of probability though. It's not a trade in and of itself. Like, I like that MLCO, which I think has also had a tremendous amount of bull flow. But the reason I liked it is because it was a breakout. It's a breakout through 12 or 12.50 of a great looking bull flag on the daily chart. Or we talked about grab, and this didn't give as great a follow through. But this one also has bullish option flow, so that's a layer of probability. But there's a level here that it broke out from around 338 to 340. And again, that one didn't work as well as MLCO did. So when you're looking at Zoom or you're looking at any name and you're seeing that flow come in, recognize that it's an important layer of probability. It means that if you can find a long trade, then your long trade's going to have a higher probability of success than it would otherwise. I don't see, at least based on the daily chart, a trade though. At least not right now. And maybe, wow, and a ton of snow and ice just fell right off the roof. Maybe you're asking me about like tomorrow or looking for this trade. I agree with you. 69.33. That's the spot this thing needs to clear. You negate the negative candle from a couple days ago. You'll also be getting above the 21 EMA at that time. This thing will start looking a lot better if we can get above 69.33 through $71. That's the spot. From EJW, would you comment on a trade journal? Is there an electric program you use to measure performance? Is it something to do longhand? I'm sure this process is different for everyone. However, when looking back for purposes of finding individual strengths, weaknesses, how do you go about analyzing your track record? Sure, so thanks for the question. I have a whole training program class on journaling. I'm not sure if you've seen it or if you have access to it, but it's definitely something you can check out if you do. Journaling is extremely important. It's one of probably a few things that I really attribute any success that I've had in this business to. Was especially early on in my career. I don't really do it as well now. Nowadays I kind of more keep statistics than journals. But for years and years and years and years, I was documenting everything. I was keeping really, really tight journals, daily journals, weekly journals, monthly journals. I started journaling before journaling software was a thing. Now there's a lot of journaling software options. I've never used any of them. I know some of the traders here on the team use different journaling software. So if anybody who's listening uses one that they like and they want to recommend it, but by all means, please let us know. But again, for myself, I started journaling before that was kind of a thing. So I just use Microsoft Word and Microsoft Excel, basically, or Google Docs to keep that. And you know, when it comes to journals, so like I've always done it longhand, kind of like you're describing there, especially my weekly journals and my monthly journals. It's like a full mental flow of everything after reviewing an entire week or entire month. When it comes to the daily journals, you know, obviously you want to look at the numbers, what your performance was, what your trading volume was, you know, things like that. But then you need to review every trade that you took. And when you're reviewing every trade that you took, you should be reviewing the mechanics. Again, what was the trade? What was the technical reason? What was the technical out? What was the game plan? How did the trade work out? Did you follow your game plan? Was it the right game plan? Should there be adjustments that you should be making? Again, when it comes to adjustments, not to get off topic, but when it comes to adjustments to your trading approach, the key is not to be changing things all the time. You know, if every time you have a red trade, you're changing your approach, you're never going to be successful. You want to make small adjustments to your trading approach over longer periods of time based on larger sets of data. So you go through all the mechanics of every trade, and then another really important thing I think is to also be kind of journaling your psychology. And this is, you know, for the purpose of finding individual strengths and weaknesses. A lot of that is going to be coming from that psychology and that review. You know, how are you feeling when you entered the trade? Did you have a specific game plan and you followed that game plan like a robot? That's what you should be doing. Or did your P&L at that time affect the way that you traded it? Did your feelings affect the way that you traded it? Did the fact that you didn't get a good night's sleep last night affect the way that you traded it? Any of those factors should be documented. And if you just do it consistently, you'll pick up on things. You'll pick up on, I didn't do as good of a job with whatever as I should have for whatever reason, and this is a consistent problem that I have. You know, for me, for a long time, my biggest weakness on my trading was my ability to control my emotions, and that I would kind of lose my cool in certain scenarios and potentially let that affect, you know, what I was doing. And one of the biggest positive adjustments I made over my career was not that I stopped losing my cool once in a while, though I got much better at it. Not that I stopped having emotions, but I've also gotten better at that. But that I at a certain point no longer let my emotions affect my execution, my trading. So regardless of how I feel, my trading always looks the exact same. It's very mechanical, it's very game planned. And that's been a massive positive effect that I've had. But that all came from journaling about it and working really, really, really hard to kind of be able to overcome and do it. You know, probably getting a little bit older and getting a little bit more mature honestly helped as well. Yeah, that's an important part. I had another point I was going to make and I forgot, so I'm going to move on. I hope it helps, EJ. From Toussaint on Tesla has consistently been one of the highest volume stocks traded. What are some of the downsides trading a high volume name? I think that trading stocks that are trading on unusually high volume is primarily a benefit. It's primarily a benefit. If you're looking at a stock that's trading on high volume, the technicals tend to be truer. The movements, the trends are truer. The trades that you find tend to shake out less. Like a bull flag pattern has a lower probability of shaking out when there's higher volume. If there's any downsides at all, the only thing I would say would be that the higher volume usually comes with higher volatility. So you want to make sure that you can handle that higher volatility and that's a stock that's appropriate for you. And it moves faster, which for me that's a benefit. But if you're a newer trader, stocks moving fast, like really, really fast, is sometimes not a good thing because it moves faster than your kind of decision-making process is capable of handling at that point. It really requires you, those in-play names with high volume that are really moving require you to be able to like internalize all those layers of probability and all those pieces of information extremely quickly and basically react to what the stock is doing. And I get very nervous when I say that you need to react to what the stock is doing. You know, that I think that can be like saying react does not imply that there's no thought process. It implies that you have developed your thought process so well for the market that you can see everything you need to see within a split second to be able to make good informed decisions in very short periods of time. That's what I mean by react. Not just like pressing buttons wildly, like reacting to movement. That's not going to be a good thing. So I hope that helps. Good question. Sometimes satire is too close to reality. Elon Musk named honorary congressman after making $200 billion disappear. That's a pretty good one. I like that. Geoff saying Trader Sync, Tradezilla, but he hasn't tried Tradezilla. Cool. Sounds like you're getting a few good things from people. Chartlog, TradesViz, TraderView. Cool. Good stuff. Is there anything on the YouTube? I actually have the YouTube open for once here. Doesn't look like it. Alright then, gang. I think it was a good day today. I hope you guys overall were able to prosper. We had a lot of really good trades that were talked about in the morning meeting. Most of them, not all. Most of our morning meeting trades worked. To some degree or another. They could have worked better with a little bit of market help at certain points in the day. But, you know, I think we were really on point with the names that we were planning on focusing on today and the rationality behind it. So I hope everyone was able to be decently successful today. If you weren't, it's okay. Make sure you're checking your process and that you're reviewing if you did the right things. And that's all we can do. So I'll see everybody tomorrow. Have a fantastic night. And YouTube people on YouTube, hit the like button for me.